Hello traders, and welcome to the second video within section number 5.5 of the IPDATrader Private Mentorship course, where we talk and deal with trading plan. Now, if you have not watched the previous video in this section, feel free to do that first, because you might need some of the knowledge acquired in the previous video to actually get along with this one, okay? So with all that being said, guys, as you can see over here, I've prepared another quick and brief PowerPoint presentation. We're going to be getting over some stuff, discussing some ideas, and essentially working towards building a trading plan, which is going to be the final video of this section over here. So let's actually get started over here. Now that I know that your mindset and approach towards a trading plan is correct, now we can ask ourselves the question of what should my trading plan contain, okay? And once again, guys, this is what I consider relevant for me. If you believe that you don't need one of these things over here, then you don't have to include it. But from my personal experience, you will need to very well define each and every single one of these criteria listed over here in order for you to establish a successful trading plan. On the other hand, if you feel like there is a point missing over here, feel free to add that to your trading plan, right? Remember that trading is individual and you are free to do whatever you want with it. I'm just giving you my experience, knowledge, and information to try and help you out. So guys, let's actually get started reviewing some of the information that we have over here. And I've prepared a couple slides, so this may actually take a bit to go over it. So traders, before we get into the actual lesson of today, just a very quick word from our sponsor today, AAAFX. AAAFX is a regulated broker which has been in the industry for over 14 years, which gives you a lot of confidence when it comes to executing trades, depositing money, withdrawing funds, trading funds, as they're a very well known and very respected and established broker in the industry. They allow you to trade pretty much anything you want, including forex, indices, commodities, stocks, cryptocurrencies, and they have something that not many brokers have, which is a zero commissions account for forex pairs on ECN plus accounts. So if you're interested with them, guys, you will find the link in the description below. Use the link in my description to sign up with them, as if you do, you will be eligible for a 100% matching deposit using it, which is very, very good and not many other brokers will do. So once again, massive thank you to AAFX for sponsoring this video, and now into today's lesson. Enjoy the video. Now, the first thing that you may want to define is actually the pairs that you're going to be trading, okay? And do not worry, we're going to be getting into more detail in just a second, but for now, bear with me. We're going to be reviewing these aspects over here, okay? You need to define certain pairs. You need to define certain sessions that you want to trade, risk management approach, technical analysis, which actually includes our methodology over here. And do not worry, this is going to get explained in a bit. And essentially, lastly, trade management. Out of these 5 things, all of them are pretty important, but in my opinion, the key over here is this one, okay? If you are good at managing risk, if you are good at controlling your emotions and not over trading, over risking, you are going to have an easier time achieving profitability rather than trader B, who is struggling with this aspect, okay? So please keep in mind, point number 3 is essential, but nevertheless, all of them are important, and we're going to be covering all of those right now, okay? So that you can have an expectation in terms of what should your trading plan actually contain over here, okay? So with all that being said, let's actually move on to the next slide over here, which is going to be dealing with point number 1, which as you can remember, was actually pairs, right? So now we're jumping into pairs, and these are the questions you need to be asking yourself in order to determine successfully what pairs you should be trading in the markets, okay? So are the chosen pairs in session, right? And this is correlated to point number 2. So what do I mean by this? Well, pretty simple once again, right? You don't want to be trading, let's say, just as an example, you don't want to be trading the USD CAD in the Asian session, right? You don't want to be trading, let's say, the Aussie dollar in the in the London session, right? You want to be choosing pairs that are in session as you're trading the markets, okay? Another thing, do I understand the spread behind the pair, right? This is also pretty important. If you're going to be choosing some sort of high volatility pair or exotic one, you may want to be checking the spread on that, because that's probably going to be very high and that's going to directly impact your profitability. So please be aware of your spread in terms of the pairs that you're trading, okay? Have I watched the pair enough? This is also pretty important, right? Even though we apply a pretty much methodology that applies to every market, essentially, you still want to have some experience with that pair, right? Because each and every single pair has its own unique approach. So you want to be familiar with that pair and sort of have watched it enough before even considering adding it to your list, right? And when I say enough, let's say if you have actually watched a pair for a period of 2 months, you may actually understand it very well. So please favor those pairs which you have experience with, because that's going to once again boost your profitability and all of that. So what are the fundamentals behind my pair? And once again, you don't need to be an expert in fundamentals, but you want to really understand a little bit of what's happening in the world, right? If you're trading let's say gold, right? You want to be paying attention to what's happening with the US dollar, the Federal Reserve, all that sort of stuff, right? You want to be up to date with that. There are completely free online resources for you to be up to date with that information. So there should be really no excuse on why you're not going to be able to understand what's fundamentally happening behind the pair. And please do not get me wrong, you don't need to be a fundamentals expert. You just want to have a little bit of the bigger picture in mind, okay? Lastly, are my pairs correlated? Also important, right? If you're going to be trading, let's say Euro USD and GU, which is essentially GBP USD, you should understand that they're correlated. So you want to be paying attention to that as well, right? These are the criterias that you need to go over in order to determine what pairs should you trade. And once again, you don't have to ask anyone else but yourself, okay? Don't ask anyone else to tell you, hey, which one should I trade? Which one is the best? There's no best or worst here, okay? It's up to preference and up to these questions over here and which ones actually which ones actually are important to you. So please understand that extremely well. That's going to be our first point within our trading plan. And as I said before, guys, we're going to be creating one in the last video of this section. So do not worry. I'm just trying to explain everything you need to know in order for you to actually be able to create one yourself. So with all that information, we can actually move on over here. What session should I trade? And this is completely dependent on your lifestyle, right? If you work a full-time job and all you have left to trade is the Asian session, then that's it, guys. You need to trade the Asian session and you need to adapt and pretty much focus on that, because that's what your lifestyle allows you, right? If you have the luxury of actually being able to sit in front of the charts for a very long period of time and actually go over that, then you're going to be fine. You will have more flexibility than trader B, who is working a full-time job, okay? So this is pretty dependent on your situation, okay? Now, once you've chosen your session, right, you need to go once again over these questions over here. Are there any news during my session? Let's say you choose to trade the New York session, then, well, you should be aware that around New York Open and the New York Stock Exchange Open, you're going to most likely have always some sort of news reports, whether that be CPI, GDP, whatever it may be. You want to be paying attention to that. Once again, am I able to trade those sessions? Does your lifestyle allow you to actually sit in front of the charts and trade London session or New York session or Asian? You need to identify that information for yourself. Lastly, is there enough volatility during those periods of time? Which essentially, if you trade anywhere between the London and the Asian session, you should be fine with that, right? Unless you're trying to trade the opening of the day, right? When the algorithm resets during Sydney, you should be okay with in terms of volatility during your session. So that's essentially everything there is to point number 2. which essentially covers the idea of which sessions you're going to be trading. And once again, you can be flexible with this, right? You don't necessarily have to be picking a specific session, but rather a time window where you can look at the charts. And if that includes London session and a little bit of New York session, then you're trading essentially both sessions, right? So understand that information very well, and we're actually going to be moving on right now. So the next slide over here talks a little bit about risk management, guys, and this is the key to your profitability. I cannot stress this idea enough, okay? How many trades will I take per day? This is crucial. You need to have a certain number, right? I mean, it's not necessarily a number, but a risk in mind for a day, right? This is correlated to this question over here. How do I measure my daily risk, right? You can use a certain dollar amount, a certain percentage amount, or a certain lot size, right? At the end of the day, you just need to understand your risk extremely well. Let's say, as an example, you say to yourself, hey, I have a 10K account, right? Let's imagine you have a $10,000 account. And you say to yourself, well, I'm going to be allocating a 2% risk per day, right? So that means, and this is crucial, guys, that you cannot get above this. If you come close to 2% per day, 2% loss in a given day, you have to stop for the day. And this is crucial. This is what 95% of people cannot do and follow. Okay, and that's why they lose, because you have to stop. If you say to yourself that you're going to be losing a 2% 2% maximum loss per day, and you've come close to it, like let's say you lose 1.8 in a given day, then either you're going to be risking 0.2 in your last trade, or you're going to be done for the day. You cannot get above this number. You need to respect yourself and to respect your plan. Otherwise, you're going to be lacking discipline, and it's not going to work out for you. I can guarantee you that. This is the key right here. Choose a specific risk per day, whether that is in dollars, percentage, or specific lot sizes that you're going to be trading. That is completely up to you, but you definitely need a certain risk per day. Last question, go back to comfort. Am I comfortable risking that amount per day? Your answer should be yes. If not, change your risk and sort of tweak it around until you're comfortable with what you're risking, right? Lastly, over here, do I have a daily, weekly, monthly goal in mind? I mean, you can set some goals, but just don't stress in terms of trying to achieve them, okay? If you're not profitable yet, your first goal should be having a profitable week. Whether that is $1 in profit, $10 in profit, 100,000, 10,000, I don't care. But set your goal to be a profitable week. If you are currently a losing trader, okay, you want your goal to be a profitable week if you're currently losing in the markets. So understand that very well. That's in regards to risk management, okay? Okay, I think that's pretty clear and easy to understand. So let's actually remove all the drawings. Once again, understand your risk, be comfortable with that. Decide on a specific amount, whether that is in dollars, percentage, or a specific lot size, completely up to you as a trader, okay? So we move on over here. What do we have now? Well, this is sort of the technical aspect of your plan, okay? And this is important and certainly, yeah, pretty much important, okay? So what time frames will I be working with, right? I get this question all the time. Which time frame should I use? This one or that one? Guys, it's completely up to you once again, okay? It's dependent on your lifestyle. If you once again have the ability of sitting in front of the charts for, let's say, 3 hours a day, then you're good. You can be choosing whatever time frame you want. But if you work a full-time job, then you might need to work with higher time frames, right? Such as the daily, such as the 4 hour, such as the 8 hour, the 1 hour, whatever it may be, okay? You want to be deciding this idea over here based on your lifestyle. You should not be asking for opinions over here. You should be determining that yourself. Now, how do I determine my structure right here, right? And we're going to be covering this much more in depth as we actually go ahead and build a trading plan. But for now, understand the ideas of expansion, retracement, and swing points. Those are things that are going to be helping you out when trying to determine your structure points. So that is that in regards to that. Same ideas. What is my liquidity criteria? What needs to happen in order for me to check this box in terms of liquidity, okay? And as you know, we have hidden and visible liquidity. So just as an example over here, you can say in your plan, in order for me to execute a trade, I need liquidity to be grabbed into my POI right here, right? And we're going to be getting into that in a second, but understand that you will need to have some sort of idea in terms of when is my liquidity criteria going to be fulfilled and what really needs to happen for it to be fulfilled. Those are things you want to be asking yourself, okay, in order to create a trading plan with the methodology that we apply day in and day out. Next criteria over here, what is a valid POI? Extremely important, right? You can base that around a certain fib level, a certain discounted price, a certain amount of liquidity being grabbed, right? You have total freedom. And once again, we're going to be creating one in a second, so you will see an example so I can ensure there's no confusion. Next thing over here, how do I confirm my point of interest? Well, you can base that around order flow breaks, right? Which essentially our protocol is nothing but order flow breaks and monitoring order flow, okay? Protocol fulfillment, you can absolutely stick to that. You've seen how it pretty much works, pretty phenomenal. So you can stick to that. You can use risk entries, right? Whether that is at the 50% of the block, the opening of the block, or sort of the low of the block. That is completely up to you, right? You can see there's multiple options over here. Next thing you want to be asking yourself, do I have the daily cycle in confluence, right? We all know what this means. Asia highs, Asia lows, sort of Frankfurt rates one side and all that sort of stuff, right? All this information that you have available at your fingertips, you need to be implementing those ideas into your trading plan, right? You can say, for example, okay, every time all my criterias are met over here, right? All these criterias, if then happens that the daily cycle is also in confluence, meaning I'm looking for sells and the daily cycle is suggesting sells as well, I can use a little bit of a higher risk, right? Let's say you decide you want to have a 2% risk per day. Let's say you want to be using a 1.5% risk on that particular position because you have the daily cycle information and that is pointing in the same direction as all of these different criterias over here do, okay? So essentially you want to be trading with the most amount of confluence that you can have. And for that reason is why we have these technical criterias that should help you in determining those ideas over there. So it's pretty simple, self-explanatory. Not going to be wasting more time over here. Let's actually continue because we do have some more stuff to go over here. So let me quickly remove all this and let's see what we have next. Continue. So yeah, the very next thing that we're going to be talking about is essentially these key times over here, guys. This is directly correlated to your daily cycle information so that you can maybe potentially, right, frame your sessions to trade and your time to trade around specific key times over here, okay? So you guys know, guys, we have the Sydney session between 10 and 12. And once again, this is based on UTC time zone in London. So you will have to do the conversion yourself, okay? I believe you're smart enough to actually do that. So I'm not going to be covering that for you. Once again, guys, Sydney session from 10 to 12. You can get some moves over here, right? Especially once you move into that 12 time window where you will have the Sydney high and low and you can frame trade ideas around that. And if you actually take the time to backtest those concepts, you will see, let's say this is your Sydney range, you will most likely see both get taken out, okay? And this is a move that you can catch. And if you can be the expert of that move, you can be successful and done for the day very quickly and essentially have a great approach to the markets, right? You can be the master of this session over here, or you can choose to trade the Asian session, which is essentially very good to trade with the information that we have, right? Let's say, as an example, you see a IFC structure being mitigated at 2 a.m., right? Let's say you have a market like this, and you see your IFC structure over here, and that's being mitigated at 2 a.m. Well, then you can assume that most probably that's going to be the high of the session, and you can take sales all the way down and until 4, 5, whatever it may be, and sort of look for that Asian low to print, get out, and sort of be done for the day. And this is your Asian session. This is what you trade, and you are the expert of that. Okay. So what I'm trying to essentially convey over here is that with this type of information that we have available to us, you can frame your session idea, right? Remember point number 2, where we talk about the session and the time to trade. You can sort of combine both things over here, okay? And that's going to be extremely helpful and beneficial for you. So I'm going to be covering the rest of the key times over here rather quickly, but nevertheless, we're still going to be covering those. Once again, Frankfurt, 6:15 till 8 a.m., where London actually kicks in. Then between 12 and 1, we have the London US cross, which essentially is a high probability we're going to be getting a move over there as well, right? So you can also be an expert of this, whatever it fits you better. I'm giving you multiple ideas here. You apply and choose whatever fits you better in terms of your lifestyle, okay? So if you see a mitigation occurring around these periods of time, you can expect a move. Same thing applies to US Open and US reversal, between 4 and 5. You can see a mitigation occurring around those times. You can expect the move to unfold and occur. So those are key ideas and key times you want to be keeping in mind when trading the markets, right? So you might want to be adding to your trading view chart some sort of note where you write all these different times down so that you can always have them available and sort of don't forget about them, because those are actually important as well. So this is everything there is in regards to technical ideas within your trading plan, right? Once again, we have different ideas. We need to define certain rules and we need to be going over those, right? So once again, that's going to be in the last video over here. This is still the second. We're still discussing the certain ideas and points that you want to be denoting within your trading plan and that you should include in your trading plan. So with all that information, guys, once again, quickly remove that. This is going to be quicker. Perfect. We're going to be moving on to the last slide over here, which is dealing with trade management. Another very important thing and another topic you want to have very well defined within your trading plan, which is trade management. So we look over here. What do we have? Well, in order to determine your trade management, you have to go over the risk management section, which is the previous section, right? Section 5, and you will find a PDF file where you can create your own risk management system, right? And this is the system that you're going to be following. Now, do not get confused. You have a system that you follow. Nevertheless, you can still make judgment calls depending on what you see in the charts and say, hey, I want to close early. I want to let it run a bit. I want to do this. I want to do that. Okay. You should ultimately be deciding that yourself. Nevertheless, it's going to be great if you have a risk management system that you can base your trade ideas around. And once again, you have the ability of doing so if you actually went through the section number 5 where we talk extensively about the idea of risk management and having a risk management system. So I'm not going to be covering this very in depth as of now. Another thing you want to be asking yourself, am I comfortable with my gains, right? And you should be really comfortable with your gains. And if you're not, you either need to up your risk, lower your risk, whatever it may be. You need to find that sweet spot for you, okay? Where you're comfortable with what you're losing and you're comfortable with what you're gaining whenever you're winning, okay? This is also extremely crucial over here. How will I journal my trades? And this is once again dependent to you as a trader, okay? Whatever information you think it's necessary for you to journal is what you're going to be journaling, right? For me, it's mostly the time, right? And this as a bigger concept, okay? You want to be tracking when you're executing, what day of the week is it, what day in the month is it, okay? Those ideas you want to be tracking. Another thing I like to sort of keep in mind is a before and after picture, okay? before and after. I always include a before and after picture in my journal, and I always constantly update those pictures as the trade is developing so that I can have the most amount of information that's going to be useful for me. So you want to be keeping track of certain ideas. But once again, this is completely independent, up to you. For me, it's mostly time. It's mostly the pair as well, right? I want to be knowing what pair is it, what was my confirmation, right? What's my idea? I like to simply go ahead and write my entire thought process behind the trade, why I executed it, what was the plan behind the trade, how did I manage my risk in that trade, and what was the outcome. And after you have enough information collected, you will find similarities, okay? You will see that, okay, most of my losing trades actually occur on Monday in the London session, and most of my winning trades actually occur in the New York session and mostly in the middle of the week. So maybe I want to be avoiding trading the London session, especially on Mondays, and I want to be sticking to the New York session, okay? But this takes time, guys. You need to start building your journal as soon as possible so that you can have information to optimize your plan and to work with, because really having a journal is going to boost your profitability in the long run. So understand that. And once again, please do not ask what information is relevant, which one is not, because that's something you have to figure out for yourself. What information is relevant for you? That's the question you need to be asking yourself. And if it's knowing the pip amount that you're gaining, then write that down. If it's knowing how the 1 hour candle is looking as you're executing, then journal that, right? Whatever it may be that's relevant and important for you as a trader. That's something that you want to be doing yourself. Now, guys, with all that being said, this is going to be the end of the second video, guys. So just to do a quick and brief summary once again, guys, we went through the points and ideas that you should be including in your trading plan, right? And these are the things that I deem necessary and important for me, okay? I'm giving you ideas here. You can add whatever you want in your trading plan. For me, it's knowing what pairs I'm going to be trading, when I'm going to be trading those pairs, how am I going to be managing my risk in terms of how much risk do I have for the day, whether that is once again in dollars, percentage, or lot sizes. Then obviously the technical ideas, right? How do I determine my structure? What is a valid liquidity grab? What is a valid point of interest? Is my daily cycle in confluence? All these types of information over here, right? Lastly, trade management. You want to be referring back to your risk management system, which once again is available for you in section number 5 of the Discord community server. So guys, with all that being said, once again, that's going to be the end of this second video within section number 5.5. And as I've been teasing you guys all the time, we're going to be creating a trading plan in the next video, okay? We're going to be doing a sample of that. I'm going to be giving it out to you guys, and it's going to be wonderful, I believe. It's going to help you out tremendously. So now for real, with all that being said, guys, thank you very much for listening, and I will see you guys in the next trading plan video.